Here are some quick reasons why I do not personally invest in gold. In the short term, gold is way too volatile to hold as an asset. As you can see in the picture, had you bought gold in 1980, you could have held for 20 years and still lost half of your money. And even in another peak in 2011, it took many years. You could have watched all of your money decline, and even to this day, you'd still be down almost 10% a decade later, even though there's been inflation. And as you can see here, over 200 years worth of inflation adjusted values of these different asset classes. It's also a very poor performing asset over the extremely long term. And yeah, it just underperforms stocks, bonds, treasuries dramatically. And it's slightly beaten the inflation. You compare it to the dollar, which people do, it outperforms, but there are other assets you'd have to compare it to as well. So as you can see, uh, it's very volatile to hold in the short term, and it underperforms over the very long term. And even if we were to grant gold as a very, very long term store of value, storing value is not good enough to invest in. If you're putting money away for the next 40 or 50 years for retirement, your goal should be for your assets to gain value. You want to create value, not store it. Here's this guy now, and he is smiling because he just sold you gold, probably significantly above market value, because that's usually what you have to do if you want to buy from a reputable gold broker, and because some people actually buy fake gold, which is a whole nother issue with buying gold in and of itself. But yeah, you have to pay above market price just to get some of it, usually. After you get your gold, you have to store it safely, which usually involves some people buying a safe or any other means of storing it. You're gonna have to hide it. You're probably gonna be a little more stressed out about who enters your home. There's a risk of it being stolen, so there are other risks you'd have to take on it. It can become a bit more of a liability. It's less of a passive investment than some people might think. You've been holding on to it for a while now, and you want to get rid of it, but unfortunately, almost nobody ever actually knows when the right time to get out of an asset is. So, but set that aside. Now you've gotten rid of it, and you're going to have to do what most people end up doing is just end up pawning it for below market value at some pawn shop or jewelry store, or any other place you can try and get rid of it quickly. Gold was already a poor performing asset that was very volatile, but now you find out you can't buy in at market value, you overpay, and then you undersell it less than what it's worth. But there actually is a way that you can buy and sell at market closer to market value, would be using a gold ETF. Now, gold ETFs are a little different. You don't actually own the physical gold. It's like owning a share of a trust, another company that holds and stores your gold for you. Gold ETFs have their own problems in that they charge you money to do that. And the largest gold ETF on the market is GLD, the ticker symbol, and they have an expense ratio of 0.4%, which basically means that every year that you hold on, so if you did ever want to hold on to gold for 20 or 30 years, like they're going to chip away at your gold holdings, and it may not even have stored its value over time. Overall, I'm pretty fascinated by gold as an asset class, and I think it's very interesting how people have always used it as a store of value and as currency and money, and even to this day, people still do it. But I just see all of these things as very, very awful aspects of it as an asset and an investment, and these are things that you should all be thinking about when investing in gold.